Hi, my name's Dave Price, and it's a real pleasure to have Tony Houlihan back on the show again. Tony, how you doing, sir?
Afternoon, Dave. Very well, thank you. You?
Oh, very well indeed, actually. Yes, the sun is shining, so always makes it feel a bit better for me.
Can't complain. Can't complain.
Exactly. Um, so what I wanted to focus more on today was actually supported housing, because this seems to be a real current topic at the moment. And
Okay.
yeah, first question is, what's your feeling? Why has it suddenly become really, really popular?
I think there's a few reasons why supported housing is so popular at the minute. I think a lot of it's geared towards sort of interest rates going up and people finding that traditional buy to let maybe not quite as attractive anymore. People are looking for the higher cash flow strategies. So they're looking at sort of supported living, supported housing, they're looking at service accommodation, anything where they can extract a bit more cash for the same property. I feel like that's a lot of it, but also there's other benefits to supported housing as well as not just the increased cash flow.
Right, yeah, because we've seen that HMO suddenly were in focus, service and accommodation in focus, and suddenly the supported living now. Yeah,
Yeah,
um,
I think supported has a little bit of an advantage over a normal HMO because the provider generally pays for the utilities too. So anyone that had a private HMO has also been bitten by, as well as finance costs, increased utility costs over the last couple of years.
indeed, yes. Actually, that's probably a really good point for people who are new to this. Could you actually explain exactly what we mean by supported housing?
Yeah, of course. So um, there's lots of different areas within supported housing, supported living. The stuff that we generally doing at the minute is quite basic supported housing. So it is essentially have a property um, set to the right standard. So if it's a HMO, it would need to comply with HMO regulations. If you're getting building works done, they all need to be signed off by building control, etc. You need to have licenses if it's in an area that will require it or a size.
Yeah,
But essentially, what you're doing is you're leasing the property out to a um, CIC, which is a community interest charity, if I can get my words out, on a longer term than a normal AST. So generally 5-year leases, sometimes up to seven, tends to be the norm, and they will pay you a figure per property, either based on the amount of tenants or the amount of rooms. And that just drops in every month. But the supported housing provider generally picks up the costs of the internal repairs and maintenance and the utilities, which obviously makes a massive difference on some properties.
right. So it's not actually doing a tenancy with an individual tenant. It's the actual
No,
housing provider.
it's essentially commercial lease. And some of the providers have got very onerous terms, and some of them have got quite simple leases. There's a lot of variety in the providers as well. So the more popular ones are like Circos and Mears, etc. But then you've got a lot of smaller organisations that are like 1, 2 man bands that are setting up at the minute too.
Right, got you. So basically, you're getting a tenant for 5 years, and they're doing all the repairs generally, or just sort of.
Tends to be the internal stuff. They don't tend to do the head. Some of them exclude things like boilers and sort of the more expensive
Yeah,
incidents. But if it's a broken door handle or something like that, the provider generally picks that stuff up.
right, got you. So the idea is you get five years or whatever the contract is. You get a fixed income every month if the house is occupied or not. So yeah, you can really see the advantages compared to a traditional buy to let.
Yeah, no voids, no reletting fees, all that sort of stuff. Yeah, so it is quite attractive in certain areas and for certain people sort of mindset that don't want to bother with tenants, don't want to bother with having an agent to manage it. Yeah, so yeah, it is gaining popularity because of that, I think.
Right. And the type of organisations that someone would let the property to, what what sort of individuals are they actually working with? As in, who will actually be living in the properties generally?
Yeah, so the end users of the stuff that we're doing is sort of general homelessness. So it could be people that are on housing waiting lists, could be people that have been sleeping rough that want to get into proper accommodation. We work with a number of different providers. Some of them are sort of alcohol and drugs rehabilitation. So again, people that might have been in support proper facilities that are trying to get back into society. And then there's other things like there's some sort of conditions, so medical conditions that means that they need a little bit of care. So, you know, the care can range from someone turning up and checking in on them once a week, to some of these that need a bit more care where they're going like every day, every other day, that sort of thing.
Right. And can I just touch on that? Because I'm sure a lot of people have some preconceptions when you're talking about people with alcohol or drug issues.
Mhm.
Um, you say that to a lot of landlords, and their probably automatic reaction without even thinking would be, I don't really want that sort of tenant.
And I guess that there is a certain amount of landlords that won't consider that. But my perspective on that personally,
Hmm.
is that you know everyone needs a chance, everyone needs somewhere to live. The organisations that specialise in looking after these people, you know, they've got trained professionals working for them. They deal with the right care providers. They've all got the right experience and skills, and they're generally giving them an extra level of support. So they're in the property quite a lot. So they can, you know, for me, that's almost a benefit to the landlord that people are there all the time, keeping an eye on things.
Right. Yeah, because it's not they're just putting someone into the property and leaving them for 5 years.
Exactly.
Or whatever I take it would have quite strong contacts.
Yes.
Got yeah, cool. No, that makes perfect sense. So how did you get into supported living in the first place, then, Tony?
It was through a friend actually. So I've been chatting to someone that I met through networking, through another property investor, um, lady called Tara Bold. We've been working together. I've been helping her with some of her refurbs and project management. And we started chatting about it. We decided that actually it might be something that we wanted to do together. So we've joined forces. So I'm helping Tara with her development business, but she also has her own leasing business where she finds providers for landlords. And she's also recently set up her own CIC as well with another partner. But I'm helping mainly on the development side, so making sure the contractors are appointed properly, making sure that budgets are run tight, and sort of liaising with their investors and things like that.
Got yeah, cool. So how long is it you've been working in the supported market then?
Probably for me personally, it's probably only about 12 months in all. So it's fairly new to me, but as I said, Tara gets involved with the providers. She's up to date with all the regs and stuff like that. So there's not very much she doesn't know about the sector. So for me, it's quite a good partnership, and you know, one of the benefits of collaboration for me.
Absolutely. And presumably, were you more from a building background then, or property background?
No, not really. So I'm sort of a procurement person by background, so I'm just used to managing suppliers and um, overseeing sort of delivery of programs and things like that in sort of when my corporate world. And then obviously I've been buying Um, property now for about 10 years, done quite a lot of refurbs, done some new builds, done some big conversions. And you know, the stuff that we're doing at the minute, the small terraced houses into four-bed HMOs.
Hmm.
We found a really good builder that we work in partnership with. And you know, we've got really open dialogue in terms of communication. So I just oversee that and make sure everything's sort of done right in terms of building control, in terms of the specs, and make sure that everyone sort of runs to schedule as much as we can.
Got yeah, right. Well, what sort of properties actually are most suitable for this? Is it HMOs? Is it single dwellings?
So we tend to be doing conversions of sort of terraced houses at the minute into small HMOs. HMOs work quite well for supported. Commercially, they're a little bit better than sort of single apartments,
Mm.
just because the rates that you get are a little bit more um, attractive. Um, Essentially, what we generally do is we pick up a two-bed terraced house, three-bed terraced house, make sure that we've got enough bedrooms upstairs to make three bedrooms upstairs that are all above HMO regulations, a bathroom, and then downstairs we tend to turn one of the reception rooms into a bedroom as well, which means they still get some communal space. They still get a decent sized kitchen. We're not trying to cram in as many rooms as we can in these properties. We still want people to sort of feel like it's a home.
Got yeah, yeah. No, that makes sense. So it's more the HMO model. It suits the best for from your perspective. Then,
I think so, yeah. I mean, if you get into the specialist supported housing, again, where they need a bit more care, where there's a bit more intensive in terms of spec, that can work too. Sort of big, larger blocks. But again, sort of some of the environments that these people are coming from, I think it's almost better for them to be smaller houses.
yeah, no, I could see that making sense. And so, how does it work? You find the provider first, and then find a property that suits them, or do you find a property that would suit and then go to the providers?
So we tend to find the property first. So we know what areas we're working in. We know where the providers are looking for property generally. Tara and Ryan CIC, which is called House to Home, is established in Wigan. So we would find a potential property, we'd share the details with them. They would ask for the commissioner or the council if they'd support that location in terms of allowing it. And then we crack on and go through the process of acquiring it and then doing any works that are needed. We tend to try and get everything signed off before we purchase to avoid any potential banana skins
Yeah.
later down the road.
No, that makes total sense. And so you mentioned something there that the housing provider has to contact the council for the authorization to turn it into supported living.
So basically, they've got um, sort of areas that they don't want to oversaturate with these things. So basically, it's making sure that there's a good mix of housing in and around. So what they don't want is every house on the street to be supported. They want it to be part of the sort of community and stuff like that. So they do have to tend to get authorization from the council. So the council will support the housing benefit claims when they come through.
Right, got yeah. So it's just that extra double check you need to do on that. So even if they're happy with it, you're happy with it, we still need the council.
Exactly. And we're just making sure there's no issues at any point down the line. It's just an extra element of due diligence that we do. Not every provider does that.
Right, yeah, depending on the individuals, I can imagine, especially as you said, some of the smaller organizations are coming into the market now.
Yeah, so there was quite a lot of, and I'm not that close to it, but there's been quite a lot of scandals recently where people were just, putting leases in place with properties before getting the authorization, and then when they tried to get the housing benefit claims, they didn't get paid, so they ended up going bankrupt,
Oh, Jesus.
which left a lot of property investors obviously in the lurch as well. So that's not something we want to do with our landlords.
Oh, definitely no. We'll come back to that point later, actually. But I wanted to go down, as you saying about areas where the councils are concerned about, they don't want an oversupply in certain areas. Is this sort of like an ideal type of location or area for this?
Not really. I feel like there's certain areas. Obviously, we operate quite northwest centric, so we will look at Lancashire, Greater Manchester, Cheshire, predominantly because that's where we're based. We tend to look at the sort of lower end house price areas, because that's really where it works. So where I am today in Stockport doesn't really lend itself to supported because the houses are so expensive. You're not getting the return that you need to make it viable.
Yeah.
Whereas places like Wigan, Skelmersdale, Warrington, certain areas of Warrington, sort of like places like Rochdale and Oldham, tend to be lower in terms of house values. So it actually works quite well as a sort of model in those type of areas. In terms of the actual houses, we prefer terraced. It's just it's quite straightforward to do the conversion works if you know what you're doing and you've got your specs sort of nailed down.
Right. I suppose once you've done one, it's pretty much rinse and repeat and follow the same model to a certain extent.
And it's not all been plain sailing. There's been a couple of builders that have overrun quite badly. We're in the process of working with a new team, and we're like sort of constantly sort of refining it and making sure that when we go into a build, we've got a contract in place. We know what the specification is. We've got floor plans which detail, everything down to where the plug sockets are, where the furniture is going to go. So there's no potential room for mistakes or issues later on down the line when you turn up with the furniture and find out that everything's in the wrong place.
Right. Got yeah. And presumably it suits these to be more sort of urban areas, more sort of not so much city centre, but within walking distance of all amenities, or is that
Yeah,
just
so near shops, public transport, that sort of stuff. Because depending on where the sort of tenants have come from, they might not have access to their own transport. They're going to need to get in around. So yeah, um, towns, sort of reasonably built up locations, sort of on the edge of towns and sort of cities. Tends to be the areas we sort of focus on.
yeah, yeah, I can imagine there'd be a relatively low ownership of car ownership in the sorts of clientele you're talking about. Yeah. So this has got to be, as you say, because you've got the housing providers ranging from literally one-man bands to huge charities. How how do you judge what service provider you should actually get in bed with, so to speak?
Yeah, so I feel like, and that's really Tara's sort of part of what we do as a business. But she knows the providers, she knows how they're funded. They've got a relatively new CIC, but the more established ones, obviously, you can check their financial position, company's house, things like that. Obviously, you can check around and see which of the landlords are potentially being in partnership with those guys. And it's always useful to speak to other landlords and their experiences.
That's a very good point, actually. Yes. Actually, talk to a landlord who's already using that provider. Yeah.
Yes.
Mm. And is there any, if I was talking to a provider for properties in our area, are there any sort of questions I should be asking or warning bells that I should be looking out for? Or
I'd be looking at sort of experience of the team, sort of how they're sort of set up in terms of the care provision. Quite a lot of organisations do the care in-house, but there's others that outsource it. So yeah, that's really important knowing how they operate that element of it. How they, everything from logging a repair to attending a repair, because you want to make sure that your property is going to get well looked after. It's no use getting a provider that's on a internal repairs contract, but doesn't actually have any infrastructure to fix anything if it goes wrong.
yeah, they can sign the contracts, but don't actually have anything in place to follow through. Yeah.
Yeah, and are they definitely doing the checks that they say they're doing? Are they, regularly checking your property for condition? Although there's people going in and out giving care, their
Mm.
primary focus probably isn't the condition and the fabric of the building. So, it's making sure they've got processes and checks and balances in place for all of that.
Right. Yep. No, that makes sense. Because I must admit, my initial view would be if it's a really small organisation with very little track records, I'll be quite concerned too, compared to one of the big players who's been doing this for years and have got a couple of million on the balance sheets.
Exactly. It's all about your individual risk appetite, and some people, a lot of the reasons that we said at the beginning about the attractiveness of supported housing was all the commercial elements. So, slightly better rents, less management costs, less hassle. But there are genuinely people out there that are doing this because they want to give back and they want to do something with a property portfolio that is benefit. So they might be more inclined to look at some of these little organizations and try and give them a helping hand.
Got yeah, yeah. And generally, the housing organisations, their funding, is that normally from charities or from government money? Housing benefit you touched on before. Where do
Yeah,
they?
so it comes from the government. Again, it's not my specialist subject, but they get funded by the government. They get certain allowances for different things. A lot of them are run as what's called a CIC, which is Community Interest Company. So they're almost like charities. And there's some very discrete differences, but they're supposed to be not for profit.
Yeah,
And the 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 profit that they make, the surplus, is supposed to go back into delivering more housing.
got yeah, yeah. But it's basically sort of housing benefit or universal credit type payments is where the
Yeah, which are topped up by a percentage normally.
right, got yeah, because of the service that's being provided.
Yes.
Yeah, got yeah. Okay. So how could I actually analyze a supported housing opportunity?
In terms of what? So if you're looking at a property that you've come across,
So if I was looking at a property in my area, I think, yeah, that would work great for supported housing. I'd like to do something to give something back. How do I start to see how my figures are going to work for it?
I approach it the same as I approach all my appraisals. So we start off with the sort of gross development value, GDV. So to get that, we'll look at what the LHA rate is in that place. So, for instance, Wigan, as an example, let's say it's £80, and the providers generally pay LHA plus 10%. So we're now getting £88 per room. Times that by the number of rooms, times that by the number of weeks, and then you'll come out with an annual figure. So that will give you your annual rent income. And then I'd work it back in terms of, what does that mean in terms of evaluation? So these things probably sell between 9 and 12% yields generally. So you can look at a range of multiplying it by, if we make the numbers easy and call it a 10% yield, we times that rent by 10% to get the property value, and then we work back and go, well, actually, the refurb's going to cost 40 grand, the property's going to cost 80 grand. You've got your frictional costs and your finance costs, so you're probably all in for about 150. So your property at 180, 190, it makes a decent profit if you're going to flip it. But if you were going to hold it, obviously you could refinance it onto a term product, and then you can release some of your cash back out of it if you've bought it using cash. But you'd have to leave a little bit in generally, because the smaller properties, the stuff that we're doing, would tend to get valued on a bricks and mortar valuation rather than a commercial valuation. Whereas if you're doing something that's like a 6 unit or a 20 unit scheme, you'd be more likely to get a commercial valuation on it. You could pull more cash out, which is, what a lot of investors sort of focus on. We don't really mind leaving a little bit of cash in because, if something does happen and it needs to go back to a private resi, you're covered and you've still got a bit of equity in it.
Got yeah, yeah. So basically, so is it a rule of thumb then? The LHA rate plus 10% is a sort of average.
That tends to be the norm around here. I'm not sure whether there's any regional differences, but that does tend to be what it is in the Northwest.
Right. So basically, you've got a 10% higher rent than your LHA rate. And then you've got no voids for 5 years or whatever on any of the rooms in there at all.
No reletting fees and stuff like that if you use an agent, and you're not paying for repairs. Generally, we brand new convert ours, and we do ours to a very good standard.
Mm.
So in theory, if you've done your refurb properly, you shouldn't have a lot of repairs and maintenance costs in the short term anyway. What we do find though is not every investor's like us, and they'll come in and put sticking plasters on everything, and they're constantly getting repairs. It's just an efficient way of doing it, but people like to, reduce their input at day one.
Yeah, which I've always thought was a very short-term view. Get it right from day one and keep your tenants happy.
Exactly.
Yeah. So with those advantages financially of the increased rent, the no voids, etc., it's all sounding brilliant. What are the actual risks that we're looking at?
So this has to be considered, and again, there's a lot of investors shouting about supported housing, how good it is. People call it guaranteed. I don't like using those phrases.
Mm.
Nothing's guaranteed in property, as we know, especially those people that have been around it for a little bit. You've just got to mitigate your risks. So, what are the chances that the provider's not going to renew the lease at the end of the term? And then you're left with a property that has to go back to, a normal property. What happens if your provider goes bust, which has happened, more recently with some of the big boys like Lotus? What happens if someone trashes the property? That can happen in any type of property, can't it? But um, all of them for me, as long as you're aware of them and you know what your process is for dealing with those different risks and you've got mitigation in place, then I feel like that's just sound property investment.
No, I totally agree with you. And actually, it's an interesting point where if the provider doesn't actually renew, so 5-year contract with them, I presume are they responsible for putting it back into the same sort of condition as it was in day one normally?
Yeah, it should be. It should be exactly the same condition.
Right. And if they give it back, then presumably you can either go to another service provider, just run it as a normal HMO, or sell the thing.
So there are options, but again, depending on your strategy, obviously I tend to line up my mortgages in terms of these leases and stuff. So you wouldn't want to be tied into a mortgage on a certain product and then have to change the use halfway through.
Right. Yeah. No, that makes total sense. Yes. Cool. And because everything we've been talking about so far has been what you're doing. I'm not sure. Is that just for yourself, or do you work with other investors as well?
So we tend to use sort of partners for investment. So we will raise some private capital to either go towards the purchase of the properties or the refurb works, or maybe deposit on some of the properties. We tend to put a bit of our own cash in there as well. But because we're trying to scale this at the minute, we are always open to chatting to other investors about doing stuff together, either on sort of a debt basis or a sort of more joint venture basis.
Right. So you're currently looking for new investors to get involved at the moment, then?
We're always open to conversations. We tend to be quite picky with who invests with us. We want people that are going to be, patient and sort of understanding about property. I think especially around property education, there's a lot of people raising money from people that have never been involved, have never invested. We
Yeah.
tend to use professional property investors, people that are doing this day in, day out, know what the challenges are, have a bit of experience, have got some contacts that maybe we can help as well. So, a lot of what I do in terms of networking and meeting people, it might not be just the capital that investors bring into the table. They've got business experience. They might have run other businesses. They might have done other property developments or investments. They can also support you with experience too.
Right. Yeah. Yeah. So it's more of the experienced investor who's been around the block a little bit and realizes what it's like getting into property.
Absolutely, but doesn't actually want to have the hassle of checking whether the builders have turned up this week and, if things are running to plan and picking the finishes and all that sort of stuff. They just want a more hands-off approach.
Absolutely. Yeah, I always joke because I manage buy-to-lets up in the northeast. And my perfect landlord is someone who's tried to manage the property themselves for a little bit, or they bought a few and they actually really know what they're getting into.
Yes.
Yeah.
Yeah, it's very good for people that have already walked the walk, people that are pitching to inexperienced investors because it's easy capital. It's not really, because those people tend to get a bit more concerned. They change their mind a bit more frequently, I find, in
Yep.
terms of I'm in, I'm not in, or I've we need to work with people that are reliable. Because that's the sort of thing that we're sort of setting our stall out to be. So we want our partners to be aligned with that.
Yeah, it's very easy to think this is suitable for any type of investor, but that makes total sense just dealing with people who have actually already got a bit of experience on property. And then they can
Yeah,
actually understand the advantages that you're actually getting on this.
yeah, definitely.
Cool. And because you said you had some big targets, you're looking to grow the organization at the moment.
Mhm.
What's the plan for the rest of the year and the next few years?
So we're currently on property number 5. We just acquired that the other week. That'll be finished in probably 12 weeks and tenanted. It'd be nice to get, so where are we now? We're at the back end of June. So I'm going to put myself under a bit of pressure. We'd like to get to 10 acquisitions by the end of 24.
Right.
So another 5 agreed and acquired. They might not all be finished by the end of 24, but that'd be a really nice benchmark to sort of set ourselves against in 25, where I hope, we could increase it again sustainably, but maybe go to 15, 20 in 2025. We're not looking to do millions of these. There's only a couple of us. It's a nice thing to do, but you also, some of the properties we've bought this year have took 6 months to get through conveyancing. It is quite difficult to try and manage that in terms of how's everything going to drop in.
Yep. I can imagine that. So where are the biggest challenges in the business for yourself at the moment?
At the minute, it's getting sort of the we probably started off that the builders and the construction element of it was causing most problems.
Mm.
Um, our next biggest challenge is finding the right investment partners, really, to make sure that we can scale sustainably and we're not having to deal with sort of 20, 30 individuals. So as we go to the next stage of growth, we will be looking for sort of investors with more capital, or
Yep.
maybe organizations that can help us, so like funds, family offices, that sort of thing.
Right. Yeah, presumably the fewer investors you deal with, it just makes life easier from your perspective.
Yeah, 'cause I'm a big believer in sort of constant communication and keeping everyone updated, depending on what their sort of comms preferences are. So some of our investors quite happy with the WhatsApp every other week. Others prefer a more formal sort of email report monthly. Others just want to jump on a Zoom call or go for a coffee or a pint. So we're open to all that. But obviously, if you're dealing with 20 different individuals, there's quite a lot of time there in terms of liaising with them, keeping updated. We're checking these things anyway, so it shouldn't actually be that much trouble to just keep your investors posted with what's going on. We've got a couple that are very, very happy with the monthly report and just come back with, okay, thanks for the update. But we've got others that ask a few more questions, and that's all fine.
Oh. Um, and so if somebody's listened to this or they've heard about supportive living somewhere else and it is a market they're keen to get into, do you provide any support for people who want to do this on their own at all, or is it just for working with your own investors?
We tend to sort of focus on our own stuff. There is sort of opportunity for us to do sort of one-off consultations with people. So we will look at certain properties and say, well, I think there's scope for that to be supported living. Tara with her contacts would then go and check providers, check whether there's demand, check what the terms would be in that area for them. We do offer that as a service, but we tend to prioritize our own stuff. And because it is so busy at the minute, it's difficult to try and do help everyone as well.
I can understand that. I imagine you guys are very busy at the moment, indeed. Yes.
Yes. Yeah, but it's it's really starting to pick up pace, so it's quite enjoyable. And having been through a couple of businesses before that have scaled quite quickly, this feels quite steady
Mm.
and quite a good pace that we're going at. So, it is busy, but it's enjoyable busy and it's good busy rather than constantly firefighting and dealing with issues.
I know where you're coming from there. Yes. Yeah, just that nice, sustainable way forward is the best way.
That's
Yeah.
the plan anyway there.
And so this market, as you say, it's coming to focus recently, but I presume it's been going on for years and it just hasn't had the profile it's had. Is presume how much further has the market got to go on this, if you see what I mean?
There's still a massive demand for this stuff, but I do feel like what happened with serviced accommodation a couple of years ago, there's a risk of that. Pretty much out of all the investors I know across the Northwest, and I get out to a lot of events. I've hosted events. I attend a lot of different events and sort of seminars and stuff like that. It feels like pretty much everyone's jumping on the bandwagon at the moment,
Yeah.
and that there's not unlimited demand. You're going to get to a point, and I think there's organisations like Circa that have gone to an area and they've had landlords giving them property, and they've actually closed some places now. So, there is a limit to the demand. And the risk is, as I said at the beginning, if you don't diversify your property investments and you just focus on one area, one strategy, you're opening yourself up to a lot of risk there.
Yeah, very true. Rather than having that spread, more diverse investment
Mhm.
base. Um, and with the big providers like this as well, the idea of moving in and out of areas that you mentioned, I I was struggling to get my head around why that would happen.
Just because they've got enough properties in that area to sustain their demand. So, let's say I can't remember the list I got sent this week, but there was sort of a dozen areas in the northwest that they'd stopped taking on new properties because they've got enough at the moment. And then there was another list of a dozen places where they really needed properties.
Right. So it goes back to emphasize your point at the beginning to be talking to the provider before you actually go and buy the property.
And knowing we've got some local authorities crying out for more stock at the minute, whereas some of the others are a bit more picky. It's like, oh, don't really want any more there, or there's too many in that area already. So it is again about having those relationships and contacts with the right people.
Got you. Yeah. No, that makes sense. Because I was actually approached a while back by an organisation. It was a women's refuge type organisation along this basis. Um, and I was asking what sort of rents are paid, and I didn't look at the LHA rates, but it was only a single let, but it was below what the actual market rate would be for the property.
Yes. Yeah, so we get that in certain locations as well. We've had one just this week actually, where the market rent has shot up that much because of demand. The three bed, I think it was a three bed terrace was like 1,350 quid in this location. And then the LHA plus 10% was coming out about 900 quid, something like that for a single let. So obviously there's considerations in terms of management, in terms of hassle. But for me, that's too big a delta to consider something like that.
Hmm. So again, just it's getting the right property in the right area at the right price, isn't it? Same as any.
And yeah, understanding your exit.
Yeah. Yeah, the exit sounds a lot easier than I was expecting, actually. Again, when it comes to the end of the term, if they're going to be putting the property back in the same condition, you just go and relet it either to another service provider as it was or sell it.
Mhm.
Yeah. Yeah, no, that makes total sense, actually.
You know, as with everything, Dave, as long as you're not over leveraged, you've got options. You can do different stuff. The problem is when people sort of bank on having the same demand and the same income for, too long a period, and then if something changes, the market changes, interest rates change, then they're just leaving themselves open to issues.
Absolutely. The same as any type of property investment, though, isn't it? That's not specific to the supported living. So,
Absolutely, it's just solid investment principles.
mm. And presumably you must get a real good feel good glow dealing with this sort of thing, do you? Or are you a bit too removed from the actual end users of the properties?
Yeah, I enjoy it. At the end of the day, Dave, regardless of what type of property development we're doing, we are creating homes. And I know there's a massive shortfall in the UK. It does make it a bit nicer that you're doing it for people that, haven't had the best of time. They might have been sleeping rough. They might have been, in a hostel, or it's people that are recovering from addiction or whatever. I really like that part of it.
Mm.
Um, it's not my primary, it's not the first primary, but I'd rather do something like that than just a normal private tenancy or just a normal buy to let. I do think it's a bit more beneficial.
Absolutely. Yeah. If the figures were right, I'd prefer to do something like this compared to just a standard property, even though these
Yeah.
figures are better. Yeah, it just gives you that feel of giving back and helping people more.
And not all property developers and investors are just greedy and looking out for their line in their own pockets. We're quite privileged to be able to do something in on that front, I think.
Yeah, I really like that. And yeah, I can see that being the icing on the cake. Yeah, it works as a great deal. And it's doing some good and paying things forward a
Yeah,
bit.
it's a really good way of putting it.
Yeah. Yeah, when you can get both of those, when you can make money and you can actually do the right thing for people and society at the same time, it's that perfect combination.
Absolutely.
Cool. No, it's been really good chatting to you about this. Yeah, really interesting the differences compared to just a normal buy to let or HMO and the many advantages of it. So yeah, I can see why this is the shiny penny at the moment. Um, and as you say, there's going to be so much demand still for it.
No, I can see it continuing. We're enjoying it and we're looking to obviously grow a little bit further. But yeah, I think it's a really good sector to be involved in at the moment.
Cool. No, and thank you very much for your time to come and talk to us and explain it all. That's been brilliant.
All right. Thanks very much, Dev. Enjoyed the chat.
All right. Cheers, Tony. Thanks.